Hi guys, it's Ian from Signal Centre. Welcome back, or welcome if you haven't been here before. Today's or this afternoon's webinar is going to be on DeMark. It is one of my favoured technical indicators. It has loads of different factors within DeMark. Today is going to be a basic webinar on the outskirts of DeMark, if you like. We could spend maybe a whole day, maybe longer, talking about the different parts and different indicators that DeMark offers. So basically today we've got 15 minutes. We're going to run over the basic concept of the TD setup and the TD countdown. So let's go to the first slide. Tom DeMark, the subjects we're going to cover is who is Tom DeMark. It started with a flip. That's basically how we start our DeMark counts. We're going to talk about TD sequential, and you'll note there that I've put a 9 next to TD sequential. So TD sequential is a count of 9 candles. And then we're going to look at TD countdown, and that is a count of 13 candles. But it's not as easy as just counting 13 candles and 9 candles. There's obviously a lot more to it than that. And then at the end, just as a reference, we've got DeMark indicators by John Pearl. So that is the book that is widely used to learn about DeMark. There's a lot of internet content out there if you want to delve deeper into DeMark indicators. So who is Tom DeMark? Well, Tom DeMark is the founder and CEO of DeMark Indicators or Analytics. He's the creator of the DeMark indicators, and they are used as market timing and for technical analysis of the financial markets. Now, there's some bits underlined there. Obviously, technical analysis we're into anyway. Financial markets is what we trade, but it's the market timing bit that I particularly like. I like the fact that there's time scale implemented within this indicator. If you look back on a lot of other indicators that are used, time scale is a big factor. Even if it's Ishimoku cloud, you know, we're talking about when we're projecting clouds forward, it's the amount of time that we're projecting it forward. If you look at the Gann theory, that's all about time. So one of the factors that I find personally quite fascinating with DeMark is the fact it's about market timing. Some of these indicators are the sequential, the combo, the setup trend, the countdown, range expansion index, D wave, TD lines, differential, and camouflage. So like I said, you can go on and on. If you want to know more about it, you should read this. You should read the book. Just in case you're sort of sitting there thinking, well, is this just another indicator, and is it going to clog up my charts, and do I really need it? It's the background of most of what I personally do. DeMark predictions. DeMark stock market predictions include having forecast months in advance the October the 4th, 2011 US market bottom to within 1 point. I mean, really? Months in advance, and you're able to dictate within a point where it bottomed out in 2011. It was the exact low and the precise to within 1 point of the exact low and the precise Shanghai composite market low on December the 4th, 2012. So the precise level of the Shanghai composite. And he also got the precise subsequent February 6th, 2013 high, then the June low and the September of 2013 high to the exact day. DeMark's recent Bitcoin market calls have been the top of the December 18th 2017 rally, the bottom on the December of the 14th of 2018, and the top on June 26, 2019. So that's not a bad CV the boys got there. It's 5 or 6, so I'm not counting them. It's 5 or 6 market tops, market bottoms to within a day or within a pip. When you think about price movement in some of these products that we're talking about here, that's a hell of an achievement as far as I'm concerned. So I put here, it started with a flip. Okay, there's a start to a song there, I think. So it started with a flip. What is a TD flip? Now, the TD flip I find fascinating anyway. It's something that I look for as confirmation of a change of trend. It doesn't always happen, or it doesn't always work, I should say. It does happen, it doesn't always work. It needs to be in combination with other factors. Again, when we've done the webinars before, and we're talking about time frame breakdowns or trend lines, or we were talking yesterday about confluence areas, it needs to have, really, you want more power in your signals. So you don't just want a TD flip on a 60-minute chart and you go, well, it's flipped, so surely that's a change of trend, and away we go. If you've had a TD flip and you've got an evening doji star, that might be a good idea, or it might add a bit of weight to your analysis. If you've got an evening doji star, a TD flip, and a trend line, or a fib level, or etc., etc., etc. So, like I'm saying, it's a part of the DeMark setup, and like I said, I do like it as confirmation of a potential top or bottom. So what is a TD flip? Now, a bearish TD flip occurs when the market records a close greater than the close 4 periods or bars earlier. So basically here, got my cursor in the wrong place. Okay, when we count back 1, 2, 3, 4, that close there is higher than this close here, and 4 is a very important number when we're looking at TD. The 4 and the 2, it's a prerequisite for different changes or cancellations in a lot of DeMark counts, if you like. So a bearish TD flip occurs when the market records a close greater than the close 4 periods or bars earlier, immediately followed by a close less than the close 4 bars earlier. So this was higher than 4 bars earlier, 1, 2, 3, 4. This one was lower than 4 bars earlier, 1, 2, 3, 4. So I've put these lines just here on the chart just to highlight where the closes was. So that was the close of that candle, and that was the close of that candle, so clearly lower. That was the close of that candle, that was the close of that candle, so clearly higher. So that produced this little 1, and I've taken all the rest of the numbers off. So that's produced this little 1 on top of the chart, and that is our bearish TD flip. And that's quite an important factor because that's where it all starts, okay? And then we've got the bullish TD flip. So obviously the opposite, we've seen some consolidation down the bottom here. We've seen a nice hammer bottom, good rejection of lows, and then a close up near the highs. So a bullish TD price flip occurs when the market records a close smaller than the close 4 periods earlier, or lower than that, I should say. Here, we count back, this is the candle, 1, 2, 3, 4, so clearly lower, immediately followed by a close greater than the close 4 bars earlier. So 1, 2, 3, 4. So there's the close of that candle. We've clearly closed above that candle. So we've got a bullish TD flip there with, just so happens to be, a hammer bottom formation. So these flips, they have to occur before we can start the counts, and they will often occur at the top or the bottom of a trend, and they'll often occur in the middle of a trend as well, believe it or not, when you've had a period of consolidation normally. Where have we gone with that? This, I've just left that slide blank. This is the basic theory behind the 9. Okay, when we get to the last slide, I'm going to talk about all the other different factors that are involved in TD, and I'd like to do another webinar on another factor which is called a TDST, which highlights the support and resistance level. So it's an unnatural support and resistance level. I'm not going to go into too much of it today, but it's quite an important factor if you're just trading 9s. And we're not talking really about 9s today. We're talking about 13s. So I will do another webinar on that at a different point, but so this is just a basic webinar today. So the TD buy setup. Now the prerequisite for a TD buy setup is a bearish TD flip. So here, remember I said sometimes they're in the middle of a trend. So we've got a 1 above the candle. We've seen a period of consolidation, okay, and that TD flip basically sticks to the rules, or has done everything it needs to do to give us that TD flip. So that is a TD bearish flip, which indicates a switch from positive to negative momentum. Now that wasn't really positive momentum, but it was moving sideways. So we've got a TD flip here, and then what happens is we then see a move to the downside, okay, to the count of 9 candles. And I've just put here that we've then got this TD buy setup with a little arrow here and a 9 candle there. So what is, it's not as easy as that. There's rules behind it. And by the way, we're very lucky because we don't really need to know the rules, if you like, because we've got indicators that we can overlay on charts. And as long as we understand what it means, we don't have to manually count these bars on daily charts and 4-hour charts and weekly charts. We just click through the time frames and hey presto, they appear. Tom DeMark, when he was formulating this technical tool, it was all done on paper. So he looked at loads and loads of different products, and every day and every week and probably every 4 hours maybe on some products, he was plotting a chart which was highlighting, and then he was counting his numbers manually. It wasn't until it could obviously be formulated into a computer program that we see what we see in front of us now. So the rules are a TD buy setup, which is what we've just seen there. So it's moved to the downside, it's completed a 9, and that indicates a buy setup, okay? So a TD buy setup is that after a TD price flip, which we talked about, there must be 9 consecutive closes, each one less than the corresponding close 4 bars earlier. And remember I said it's very important in DMARC, we're talking about 2s and 4s and 9s and 13s, but 2s and 4s in the counts, okay? So if that count was moving to the downside and we didn't get a close, in other words, we had quite a decent correction higher perhaps, and we didn't get a close lower than the close 4 bars earlier, then that count disappears, okay? It becomes invalid and we have to start again. So if at any point the sequence of 9 consecutive closing prices less than the close 4 bars earlier, up to and including the close of the TD buy setup, is interrupted, so it falls off, the developing TD buy setup must be cancelled, and you begin anew. And when it says you begin anew, it means that you've got to wait for that flip again. So a lot of times, the time you will, before you can get another buy count, you will get a move to the upside, because we have to form a TD flip to then move to the downside to get the buy set up. Okay, so you don't just you can't just look for the 9s. You've got to look for the TD flip before the 9 gets produced. Once a TD buy setup successfully reaches 9, then the first phase of TD sequential is complete. Okay, so here I've just put a chart on we've got a TD9 complete. That was actually the one that I showed you earlier. And then we get this move to the upside. Now, this factor here, to me, is quite important. We then look for at least a correction to the upside within 4 candles. Okay, so there's a joke in there somewhere. The 9 count, sometimes you'll get a 9 count and then it will just flatline. But what we want to see is at least a correction to the upside. Sometimes, if we're lucky, and sometimes if it's a solid 9 count, and we're going to talk very briefly about those in a while, then it can be the end of a trend. It can also just be a correction, and that is actually quite obvious when we talk about TD sequential. So TD buy setup is normally a correction, but it will normally or sometimes lead to a TD sequential, and that is the 13 count, and it's the 13 count that we really want to be trading, not the 9s. Okay, the 9s are part of the setup. The 13 count is normally highlights the end of a trend, not just a correction. Okay, so here, the sell setup, the prerequisite for a TD sell setup is a bullish TD flip. And again, we have one here, okay, and then which indicates a switch from negative to bullish momentum. And then we have that move up in 9. And you can see, normally they're quite steady moves as well, i.e. you're not getting big corrective dips lower, because if you did, these counts would break quite often. So obviously the TD sell setup is opposite to the buy setup. A TD sell setup is that after a bullish TD price flip, there must be 9 consecutive closes, each one more than the corresponding close 4 bars earlier. If at any point that's broken, then as we said before, you have to start anew. Once the TD sell setup is successful and reaches 9, the first phase of the TD sequential is complete. And here, again, I've obviously picked ones that worked. Here, we've got a 9 count, and within 4 candles, we start to move to the downside. So that brings us on to the basics of TD sequential buy countdown. And this, I suppose, is it more important? This, you get more power from a 13, that's for sure. Like I said, you know, the other ones are mainly corrections. So if bar 9 of the TD buy setup that we've just seen also has a close less than or equal to the low 2 bars earlier, then that bar 9 of the TD buy setup becomes the bar 1 of a TD buy countdown. And we'll see this in the chart. When we go to the chart, it might be blowing your brains at the moment. And like I said, you don't need to really know what builds this if you don't want to. You just need to know how to trade it. If that count is not met, then the TD buy countdown bar 1 is postponed until it does. In other words, 2 bars we're talking about here, the low of 2 bars earlier. Okay, sorry, I keep on going to the wrong screen. So it's the low of 2 bars earlier, which is really important. So it's postponed until it does, and the TD buy countdown continues until there are a total of 13 closes, each being less than or equal to the low 2 bars earlier. Now that as well is quite important, because to get a low of just 2 bars earlier, you'd have to get quite an aggressive move to the downside, okay, for all of those bars to keep in count, okay. Otherwise, this would break quite often. But, and again, it's not going to be for this webinar, but they can get, what do we actually call it? They can, not reconditioned, they get recycled. Okay, so you can get a recycled 13 count. So sometimes you'll be looking at a chart and you won't notice a 12 because the 12 count might be 10 bars previous, but then suddenly a 13 count appears, and it's because it hasn't fulfilled all of these details. Okay, so in other words, it hasn't had a close less than the close 2 bars earlier for some time, but then it suddenly appears, and that's your signal potentially to get long or short of that product. So much easier to explain on a chart. Okay, so this was the flip up here. So then we get this 9 count, okay, to the downside. Then we just get a tiny correction in this case, and the TD buy setup has been completed. We then start the TD the TD sequential buy countdown. Okay, so notice that that bar didn't commit, if you like, to being low enough. So this bar ends up being our number 1 count. If this bar was lower, then that bar would be the number 1 count for the sequential buy countdown. And then what we can see is here 1, 2, 3, 4, 5, and then it misses one out. If you can see that on the chart, so it misses one out because that isn't the close isn't lower than the close 2 bars earlier. So we can quite clearly see that that's the bar 2 bars earlier, and that isn't lower. The close isn't lower than there. So it drops one until we do get a close lower. Then the count starts again, and then drops one again because it isn't lower than the 2 bars earlier. And you can see here we get 7, 8, and then we get quite a drawn out period. What's that, 5 or 6 candles where the count stops completely and it doesn't start again. Oh, that's annoying. What have I done there? And it doesn't start again until this candle, but then we get a strong move to the downside. We post the 13, the buy countdown is complete, and we get the move to the upside. And like I said, these moves from 13 counts, especially if you've got other indicators or you're looking at price action with a 13 count, the moves are normally more aggressive, i.e. you often see a 13 count at the top or the bottom of a substantial trend. And here, TD sequential buy countdown is complete. There's a bullish outside candle, and we move to the upside. What I often do in that case, or in that scenario, I will look for that TD flip. So I've not only got a sell countdown or a sequential sell countdown that is completed, but then I want to see a TD flip, an opposite one to this TD flip. That was a sell. I want to buy TD flip down here to confirm, or hopefully confirm, that we've seen a base and we're going to move to the upside. So obviously the sell countdown is opposite if bar 9 of the TD sell setup also has a close more than, which we do in this case actually, or equal to the high 2 bars earlier, then that 9 bar becomes the 1 bar of the sell countdown. If that condition is not met, it's postponed, and we don't need to read through all of that again. So here we can see that this is the TD flip. Okay, then we move higher with every close being higher than the close 4 bars earlier. So that then produces our TD sell countdown here. Because that's an upward candle, and because it's closed higher than the close 2 bars earlier, it becomes our 1 candle for TD sell countdown every day. It's like magic, the dog. And then we move to the upside. So we move to the upside, then we lose the count, then we move to the upside again, then we lose the count, and then we move to the upside again. And we produce this TD sell countdown right up here. Now, you know, normal analysis might have been tempted to get short here, engulfing candle, short here perhaps, but we don't see the 13 until here. So if you'd placed stops above highs, you would have been taken out of these two rally tops, and you'd actually have seen the top up here. If we go to this last slide, and this is the advanced DMARC. So as I was saying, this is just a basic 20-30 minute chart on the basics of DMARC. If you really want to know loads about it, then it's this book, DMARC Indicators by Jason Pearl. I will be doing some more basic webinars on DMARC. These factors are important. The TDST, that is important if you're going to trade 9 counts. It's the start of the flip, okay? And we use that as support and resistance. So imagine there's a 9 count to the downside. That's the start of the 1 count. That start of the 1 count then becomes resistance. If that 9 count that moves higher doesn't reach that resistance count, then that is more than likely to be just a mild correction, and we'll move again to the downside. So TDST is important. We will talk about it in another webinar. Perfected, I mentioned that earlier. We've got perfected nines and unperfected nines. Is it consolidation or reversal? That's very important when we talk about TDST. Cancellation of counts. Now, we've talked briefly about that. There's more to it. Recycling of a count. Again, we talked briefly about that, but there's more to it. A camouflage. There's something that's called a 9-13-9. So you get a 9 count, then a 13 count, then a 9 count. Gives it more power. We've got things called combos. DMARC also talks about a D wave, which is similar to an Elliott wave. And then, right to top it all off, when you think the book's nearly finished, you've got oscillators, okay, which is DMARC's take on momentum oscillators. And even those are quite interesting as far as I'm concerned, because take a momentum indicator that he has that's similar to RSI. Now, RSI, you go above 70, and that normally means overbought. But DMARC actually has an indicator that says overbought buy instead of overbought sell. So there's a lot of interesting factors that within DMARC that you can explore. Okay, I hope you've enjoyed that webinar today. We'll be back again soon with some more. Many thanks.